The stock market has wiped out over $5 trillion of valuation over the past 3 weeks, and this might not be the end of it. So today we'll take a closer look at what has been causing this important market correction and how I am personally preparing to face a potential market crash in 2025 and how you can do the same. Since the end of 2022, we've assisted to an important outbreak of the stock market that has gained on average over 20% of return per year between 2023 and 2024. This was partially driven by the explosion in valuation of different technology companies such as Tesla, Nvidia, and Meta that has been the true joy of many investors. However, this type of growth was truly unusual, knowing that historically the market has been returning over the past couple of decades some return of about 11% per year. This has made that over the past couple of months, many specialists have been forecasting a potential recession and a potential market correction that could be coming over the next couple of months. Indeed, the important bull market that we've seen over the past 2 years have made different equities overinflate, meaning that the valuation was no longer interesting for value investors. This is why different investors such as the legendary investor Warren Buffett has decided to liquidate a bunch of its biggest possessions and is currently sitting on the most important pile of cash of its history. By the end of last year, it even sold over $134 billion of stocks, barely spending $3 billion on buybacks. So over the past couple of weeks, knowing that the fairy tale might seem to come to an end where the market is down more than 7% over the past month, it seems like Buffett's strategy is quite profitable. When we look at the main reasons that could explain this important downtrend momentum, the main one by far is the potential threats made by Donald Trump of imposing tariffs on different countries. Indeed, President Trump's on and off tariffs policy drove up a lot of uncertainty and market volatility, where the investors have started to get worried about the impacts of a trade war between the US and its closest allies. If Trump keeps his tariffs imposed on multiple products of countries such as Canada, Mexico, and China, this could lead to a disastrous impact on the global economy. On their side, tariffs will have the impact to drive the price up of different goods and products on which the tariffs are imposed. So by imposing a 50% tariffs on aluminum and steel products from Canada, this means that Canadian companies will need to pay this new charge to export their aluminum and steel in the US. But this will also drive the price up of many different goods and products that are made out of this aluminum and steel from Canadian companies in the US market. The problem with that is that it can lead to a rapid escalation of a trade war between the US and its closest allies, because in this type of measure, it is never of only one way. And so if tariffs are kept in place for a long period of time, this could lead the price of essential goods and products up over the next couple of months, notably products such as food and electricity. And at the end of the day, this will also drive up inflation. So with consumer sentiment that is getting worse, the inflation expectations that are rising, as well as the 10-year treasury yields that keeps increasing, many investors will keep a close look on the Fed's next meeting that is coming up on the next week, because it is expected that the Fed will keep the same policy rate, and that despite the Bank of Canada lowering the policy rate over the past week despite the threats of potential tariffs. But globally, the US, as for many other countries, are expected to live a potential recession in the next couple of months. Last Sunday, President Trump even addressed these concerns about a potential slowdown of the economy over the next couple of months by describing the recent turmoil as being a period of transition, and by saying that it could take a little time, but that at the end of the day, it would be great for the US. So even if the tariffs have been altered for 1 month, and even if there are currently some back and forth, notably with Canada, about potential tariffs, notably on electricity, well, in the short term, they look to be there to stay, meaning that this could plunge all of us into a potential recession in 2025. The problem with the recession for the stock market as a whole is the fact that people tend to have less money in their pocket throughout a recession with a lot of job loss, and this means that they won't have a lot of money to invest in the market, meaning that the market could plunge further behind. So now that you understand what is the current state of the situation, let's examine together how you can prepare yourself to face a potential market crash in 2025. The first thing that you should avoid making is pretty obvious, but it is to avoid panicking. The problem with human psychology is the fact that when things are starting to go bad, we tend to try to go and retreat ourselves from this situation to remove ourselves from problems. However, when you are investing, you should pretty much do the complete opposite. Have you ever heard from the famous quote from Warren Buffett that says, "Be fearful when others are greedy and be greedy when others are fearful"? This is exactly the mindset that you need to have when you invest in the stock market. If the markets plummet and massively correct, you need to have the mindset to see this as a potential opportunity to buy excellent companies and great ETFs at a lower price. Just like if you were going to shop and that you had a certain discount on the clothes that you wanted to buy. When you are investing, you need to have a long-term plan, meaning that when you see these market corrections, they kind of represent some great opportunities for you to DCA on your investments. But another important aspect that you need to have in your investment strategy would be to have some great diversification. If on your side, you're trying to optimize the overall profit that you'll be making in the future, basing yourself on the analysis of between 2022 and 2024, where the technology companies have been exploding, this could mean that on your side, you would want to invest only in great technology companies. But the problem with that, as we've been able to see since the beginning of 2025 with companies such as Tesla, is the fact that these companies will tend to be way more volatile than the overall market. And so this means that when we are in great bull market, as we've been over the past 2 years, these companies will tend to gain a lot of value. But in the upper end, when we are in important bear markets, they will tend to retreat even more than other companies. So it is important for you to counterbalance the risk of it by notably including potentially great ETFs and other great companies in other important sectors. It means that globally you need to be well diversified, not panic, continue to invest consistently in the market, and most importantly, have a long-term strategy of investments to invest only in great quality assets. On my side, however, since the end of 2024, I have decided to take profit on important positions that I had, notably in different technology companies. This was because I personally found that the global market right now was way too expensive, meaning that it was potentially overvalued compared to its true valuation. And so I've decided to take a lot of the profits that I've generated from these companies to put back on the mortgage of my property to eventually refinance it and buy another property. Nevertheless, since I've already paid back all the potential capital that I could put on my mortgage for 2025, all the money that I am currently earning is pretty much going all into a high interest savings account at the moment, meaning that I currently have quite a lot of liquidity on hand. And it means that if the market continues to correct over the next couple of weeks and months, I will definitely be reinvesting a lot of my money into it. At the moment, one of my main investment priorities is to continue to invest in great quality Canadian dividend companies on the market because they are continuously providing great financial stability with income, which can be particularly interesting in a potential bear market. So on your side, if you want to discover different companies in which I will potentially be investing for the rest of 2025, well, check out the video that's gonna be right over here, and I will see you soon. Peace!